Well, the Treasury announcing its third sale of AIG shares after its record $182 billion bailout of the company. The $5 billion sale reducing the government's stake to 63% and bringing AIG's debt to taxpayers down to $39 billion. That's all. Time to bring out our panel. Clint Greenleaf is the CEO of Greenleaf Book Group in Austin, Texas. Marjorie Clifton is the founder of SpikeTheWaterCooler.com and principal of Clifton Consulting in Chicago. And Monica Crowley is a radio talk show host and Fox News contributor. Clint, let's start with you. What do you say?
You know, I'm glad we're getting our money back, but the problem is this just masks the problem. I mean, it was a false validation of this idiotic belief that we should give money to the private sector. And the problem is now I think people are going to see this as a good thing, that we're getting paid and we should do it again sometime.
Good point. Monica?
Yeah, it is nice that we're actually getting paid back, although it is kind of late in the game. But look, we are getting our money back. But I think Clint is right. It reminds people that the government had this massive intervention in the private sector over the last few years. And this is really going to be debated going into the presidential election. What is the proper role, size, and scope of government? And should the government be intervening in the private sector even during times of economic crisis? Mitt Romney answers one way. Certainly Barack Obama answers a different way.
Marjorie, you know, the GM CEO recently said, I don't know when you're getting your money back, which made me worry. I mean, I don't think all is well in payback land. What do you say?
Well, it's coming along. I mean, look, the economy's been moving along slowly, not as fast as we'd like, but this is a reminder of how far we've come. And while there is a lot of scrutiny about, oh, was this a wise investment, we are seeing that it is. We are getting our money back, and we've actually seen these companies kick-started into better times than they've seen for a very long time. So maybe the pressure of having millions of Americans watching your success actually is the jump these companies need. It's worked.
Millions of Americans watching your success with their taxpayer dollars. All right, well, let's talk about another private company here doing its own thing, Facebook. Its IPO roadshow in full swing today. We've been covering it all day on this network. They're persuading potential investors to buy a share in what's expected to be the biggest IPO ever. The company plans to raise over $10 billion and debut on Friday, May 18th. Marjorie, are you going to try to get some of that?
Well, it's the hottest ticket in town, and they are keeping it as a private meeting. I follow the ways of Warren Buffett, and Warren Buffett has decided not to invest in Facebook. Facebook right now is valued at 24 times its actual revenue, and so it's sort of this new economy that nobody really is sure how it's going to play out. So it's a really risky one. Maybe people will win big. I play it a little safer, so I'm going to hold out and see what happens.
Interesting read. Monica, what do you say?
Yeah, when you take a look at, in the past, the IPOs of major social media organizations and companies like Facebook, you see an initial spike and then you see a pretty steep drop-off. That doesn't mean Facebook is going to do that, but I think a lot of investors are probably a little wary about this roadshow. They are taking it to big investment banks, and they're taking it to essentially the 1%, you know, well-heeled clients who have big money that they can infuse into this. It's not necessarily the 99% right now.
Clint.
You know, it's funny. I'm going to stay the heck away from this. I have no interest in touching this. I'm not going to short it either. But I'm not going to, I just don't really want to touch it right now. I think that eventually we'll see if it actually has validation, but I'm going to guess no right now.
Well, you know, it's funny you say that because somebody was telling me earlier, my grandma's on it, I'm out of it. There you go. It's not cool anymore. Well, okay, the foreclosure crisis pushing millions of former homeowners towards apartments, causing rents to skyrocket. In fact, many markets, it's actually cheaper to own a home than to rent. Monica.
Once again, unintended consequences in an economic crisis. Government came in repeatedly to try to prop up the housing sector. We've seen the effects of this. Still, you have record foreclosures. You've got home sale prices continuing to slide. And again, one of the unintended consequences that people whose homes have been foreclosed on having to go into rentals, that's driving up the price of that. You saw a similar effect with cash for clunkers, with used cars. It ends up warping the market in every way.
Clint.
Yeah, you used to have this ebb and flow. When rents are high, prices come down, people buy a lot, and keeps on flipping back and forth. The problem is now no one can get a loan because the government has come in and screwed up the market so much. So it's really giving an opportunity to that 1% with a lot of money to go out and buy a whole bunch of rental property.
Marjorie, what do you say?
Well, maybe some of these foreclosures will actually turn into new rental properties, which would give more market and more opportunities for rents to go down. I actually see this as an opportunity for the Occupy Wall Streeters who've hit the streets again. I mean, cheapest rent in town are the parks if you want to go camp with them. I personally don't want to join, but it's maybe a new idea. I don't know.
I wonder how they'll feel about that. Clint, Marjorie, and Monica, thanks for coming on tonight. Great job, everybody. Appreciate your time.
Thanks.
You bet. Thank you. Well, just